what I do as a business owner, as a CPA. My vision, the vision for my company and myself personally, is really to help empower that next generation of multimillionaires, particularly from underserved, underprivileged communities, to help them reach financial freedom. And there are a couple of principles that I believe can help in that area of reaching financial freedom. And one of them is entrepreneurship. That's starting, owning your own business, in addition to equity, in addition to education. So I'm going to get into, really some deep dive areas of finances. But let me say before I jump in, this is a really broad topic, and by no means can you become an expert on it in 1 hour or whatever we have, allotted for time. It's just simply not enough time to like really go into detail on all these areas. But I'm gonna try to touch on enough of these areas so that I at least plant a seed, so that as you kind of identify the areas of your business where you need help with these things, by all means, feel free to schedule a consultation with me. For anyone who is part of the Millionaire Focus Group, which we do regularly, or if you happen to just be a guest on this meeting call on this Zoom, I'm going to offer a free consultation to you. I generally charge about 125 per consultation, but again, for anybody in the focus group or anybody that's joining a Zoom call, you'll be able to get that for free. The only thing I'm going to ask in return, I'll go into detail on this a little bit later, is just to tag me on your social media post, or send an email out to someone who you know of who may be interested in speaking with an accountant, and just copy me on it. Again, I'll go into more detail on that. But let's jump into it, man. So starting off with a question, I'm going to interrupt you a little bit. Why do most businesses fail? Why are a lot of businesses in this country set up for failure, right? And I'm not saying that as a theory. Here's what we know from the SBA, Small Business Administration.gov. Only 50% of businesses survive past 5 years, right? Startup businesses. So why is that, right? For me, that has a lot to do with, just everything, man. Like when I started my company and I walked away from corporate America, I was working as a controller, which is like the highest accounting position for a $300 million business unit. And pretty much just working every day to help make this company more profitable, right? Meanwhile, in my community, I'm coming back, I'm watching business owners set up shop and close in a couple of months. I'm watching people struggle to try to navigate this entrepreneur space, knowing that it's resulting in failure for a lot of people. And that's what helped me make the decision that, man, I got to walk away from. I didn't think I was living out my God-given purpose or potential. So I decided to start that company and really focus on entrepreneurs, especially people who come from my community, people who come from my faith background. Of course, those aren't the only people that I work with any and everyone, but I decided to make it a focus, not just to make super large companies even more profitable than they already were. So I'm going to ask you guys a favor. I am not a person that likes to be lectured. I believe that we learn better when we have interaction, engagement. So please, as I'm going through these things, I'm going to ask you to help me out with a little interaction, ask questions, give your comments, give your feedback. So I'm posing this question for you. Why do most businesses fail? And anybody, just your opinion, just your thought process on that. Why do most businesses fail? Anybody?
Personally, I know starting this juice business, the most important thing for me being the entrepreneur of this business is figuring out every single detail of it. And what I mean by that, I've just been watching tons and tons of business management videos and stuff like that, especially in the juice business. You have to figure out exactly where everything is going, how's it coming in, and how much it costs to make a certain product. So that way you know your number and you know your spoilage rate as well. Because it's like, let's say beginning of the week you buy your produce for your for a couple of days, because realistically you want your produce as fresh as possible. So you have to calculate the amount that you predicted you're gonna make within, like, say, by Thursday. Then you have to see how fast it's gonna spoil, make sure that you're getting the freshest and non-moldy produce as possible. And then just kind of calculating risk, because I'm using glass bottles, just because that's how my philosophy is. I try to stay as eco-friendly as possible. So I have to calculate, all right, well, a bottle might break, so that might be, minus whatever, how much the bottle is. I I might drop the juice on the floor. That might be $10 right there down the drain. It's just like, I think just being very, very persistent, consistent on your numbers and knowing exactly how much everything costs from an ice cube to a banana to a drink. I think that in itself, just knowing your finances and your numbers, I think it goes a long way. I think a lot of businesses, when they start, they skip that part because they have this passion, they have this vision and desire to, I want to be an entrepreneur, but people don't actually educate themselves on how to be an entrepreneur. People don't know that, you have to know your numbers. People don't know that there's more things in the LLC. People don't know that you need an accountant or tax professional, et cetera, et cetera. But I think my answer, in short, I think it's the numbers that a lot of people fail.
Yeah. Love it. Love that answer, man. You sure you don't work as an accountant, man? Or do you like have like an accounting business on the side or something? No, I'm just playing.
Remember we had a conversation about the financial thing? Look, I read this book right here.
Nice. Nice. So great input. Anybody else have any other thoughts on why do most businesses fail? Why are they set up for failure?
No, go ahead.
I was going to say it's just poor management, poor cash flow management. Sometimes when your expenses exceed your revenue and you just have that as like kind of like a repeating kind of like course of action like throughout like the year or multiple years, that's just going to deplete your business, and eventually it's not going to be worth you actually staying in business, and that's why what will actually lead to your failure. And I mean, it does depend a little bit because of the type. It depends on the type of businesses that you have. If you have like a tech company or versus a restaurant, it's kind of like not necessarily margins, but the guardrails or whatever like the outlook is for like failure is really dependent on a lot of different things.
Yep. Gotcha. Yeah. So cash flow management, I heard, I'm hearing you speak about, just the ins and outs of your business. Adonis, I heard you mentioned, the business management, talked about spoilage rates and a bunch of things like that. Anybody else got any input on why do most businesses fail? Why are we set up for failure from the start? A lot of us.
Yeah.
Can you hear me?
Yep. Yes, sir.
All right, cool. This isn't even me thinking. There's a book called The E-Myth, and I think for a lot of entrepreneurs, we really come in here with the vision and the passion, right? But all the other small details, we're not so proficient at, right? Because that's not passion. We try to throw it on our lap because we're very optimistic, we're very driven. We have all these characteristics to be the CEO. And I think the number one reason for failure is we don't understand the notion of, you only have one head. How are you wearing all these hats? You know what I mean? So that for me has been, when I'm listening to everything that everyone is saying and what I see in real life is that you can only wear one hat, and that's got to be the CEO hat. Everything else you got to delegate because it's not even in your realm of strength. Like if you're starting a restaurant, you might be the best chef in the world. What about your bookkeeping? What about your marketing? What about inventories? What about supply chain? They may not, you might just be best in the kitchen and the personality that pulls the people in, but everything else step aside. You know what I mean? I think not understanding that or not willing to pay for that. I mean, especially when you're starting off. I remember I heard someone mention finances. Especially when you're starting off, you say, listen, it's going to be cheaper, right? If I run it myself for the sake of helping the business grow, not understanding that that's actually doing the opposite. Yeah. So, yeah.
Love it. Man, that is one of my favorite books, The E-Myth. And is it Hugo? Is that how you say your name? Ugo. Yeah, I remember you and I spoke. It's probably been a couple of years ago. But I remember we spoke briefly about like some tax related stuff. So I appreciate you jumping on. I appreciate that input. Yeah, man, that is one of my favorite books, The E-Myth. So true, man. It's so many areas of that book that apply. So yeah, I'm glad you mentioned that. Anybody else got any thoughts on why are most businesses set up for failure?
Hey, Brian, I know from my perspective, just having, I think I'm on like my third or fourth business.
Mm,
But specifically when I owned my business on South Street, I was young, had the vision for profits and for the prestige, and had my eye on the end goal, but had no real desire for the maintenance or the process part of it. So I think from a financial aspect, I had my eyes on the profits, but was completely blind to, well, not completely blind, completely, I was ignoring the tax part of it, the bookkeeping part of it,
mhm.
the financial plan of it, cost, expenses, just really focus. And I think a lot of entrepreneurs fall into the trap of how much money they can make, but don't understand the process of maintaining and growing and scaling a profitable business. And so even if they do make the money, they'll make it and they'll fail because they've either skipped steps or ignored the necessary steps to sustain and scale that business.
Mm-hmm. Yeah, love it, love it. There is indeed a what I heard you say. The key word that stood out with what you said. There is a process to running a business. Like there's the business of running the business, right? Like that is,
Indeed.
man, that is so true. Anybody else have any other thoughts? Want to make sure I get as much input as possible.
Well, I know for a fact, vision, number one. Also, making sure that you have everything checked off before you really start the business. That's from your LLC, that's from your marketing, that's everything you can think of, but you have to have a plan. You have to have a plan, and that plan has to be drawn out and it has to be put out to a certain way. Marketing is one big key, but if you look at it, it's other things that fail, like all you guys have said. It's those pieces, but it's actually putting that plan together before you even start. So it's making sure that that plan is all together, that accountant is sitting there, that LLC is set up the right way, that where's your funding coming from? Where's the extra funding coming from? How much is the project going to cost? Where's the project? Where's it located? It's finding out all those things and putting it on paper so that you see. And the biggest thing people always say is, oh, I need a business plan. Well, business plans aren't developed until you're 2 years into the business. It's not developed the first year. It's developed 2 years into your business because now you have something to really go off of. I call them hypothetical plans. And hypothetical plans are just something that banks won't even receive when you're first year in business. That's why they won't take, they don't give loans out that much. SBA does, but that's difficult in other ways, but usually they don't give out loans because you don't have the proven factor, because your business then speaks of your business plan. So it's usually 2 years in business and then you start your business plan. So it's having all those things and figuring out, because each person's business is different, but it's also putting that best foot forward and knowing what you want to get into, knowing the experience you have in what you're getting into. Those things are a factor also.
Yeah, for sure. Yeah. It's interestingly. Yeah. Sorry, go ahead, Mark.
I would add too. I've been trying to think of something that hasn't been said. But one of the things I've noticed, especially in my field, is that we have these expectations of it just being about like what we sell. And oftentimes we'll get into a position to where maybe we don't sell out, and that becomes a defeat mechanism versus like being able to push through. And I know a lot of entrepreneurs that have started, especially like clothing brands, lifestyle brands, that if it doesn't go exactly the way that they planned, they quit. They don't understand like how to pivot. The money didn't come from this place. They don't know how to raise it. If the person printed it wrong, they just say, I'm not going to do it. And I've been in that place before where my expectation of myself was so grand that something could happen out of my control. Then you're left with a decision. Do I push through? Do I figure out a way to get it done? What is my goal? Is my goal to sell out? So if that doesn't happen, then it's a fail? Or is the goal to actually do the thing? Is the goal to actually put the event together? I had a friend tell me that every single time we do something, the goal should be first to actually do it. So many people say, oh, I'm gonna do this, I'm gonna do that, I'm gonna raise this, I'm gonna do that. And they never do it.
Exactly.
Because they're so worried about the end goal and not thinking about everything in between that's necessary to get to that.
For sure.
Taking that first step is crucial.
For sure. Yeah. Yeah. So I agree with everything that was mentioned, right? I heard expectations, vision, plan, process, wearing one hat, cash flow, business management. Like, I am 100% in agreement with all of those things, right? Here, and I'm a little biased, so let me say that from the start. But here's what I believe to be crucial to being able to not set up your business for failure from the start, and that's financial management. That's being able to run your business by the numbers, to be able to understand, right? Like, not all of those components matter that we talked about, but the one common thread that I believe is persistent, at least in terms of clients that I speak with, is just the financial education part of it. Like, just being able to educate yourself or get guidance on how the financial operations work within a business. Like, that's definitely one key component. Reason I say that is because most startup businesses, when you start a business, you generally don't have a CFO, right? You don't have somebody that's just focused on the financial function and leadership of your business. So you're wearing that hat, as we talked about with the E-Myth, in addition to the CEO hat, in addition to most of the time when you're starting a business, how you manage your personal finances is going to dictate how you manage your business finances, right? So if you're in the habit of budgeting on your personal finances, right, of saving, investing, doing those things, you will generally do far greater in understanding and running your business by the numbers than if you're not doing those things in your personal finances. So I'll put up a couple of concepts, right? Because sometimes we get tripped up and we think that business, like the financial concepts of a business are so, confusing or overpowering, and they're not much different from the same concepts that you apply in your personal finances. So I'll give a couple of examples, right? In your personal finances, you've got your income and your spending, right? Let's say you work a 9-to-5 job, you make what you make from your job, you spend what you spend, and what's left over is your savings, assuming that your income exceeds your spending. Or conversely, if your spending is higher than your income, then you're more than likely you're going into debt in your personal finances. Look at the business side. You've got sales, you've got expenses, and what's left over is your profits, right? So you got the money that you're generating from clients, from products, from services. And if that amount exceeds what you have to spend paying your own bills as a business, running a business, then you've got profits. That's what you end up paying taxes on. A lot of people don't realize that you don't pay taxes just on the sales, right? And in most cases, you pay taxes on the profits, right? So that concept is not much, if you look at the personal side versus the business side, it's not much different. You've got savings on your personal side, or you've got profits on the business side, right? Also on your personal finances, you've got assets and liabilities, right? The things like, if you own property, if you own a home, I'm not going to say a car because a lot of people, don't realize that's a depreciating asset. So I'm going to put the car aside for a second, but the things that you own of value, like your home, your investments, your 401k, anything you have of financial value, you want those things to exceed your liabilities and your personal finances, right? Your debt, your credit card debt, your loans, things of that nature. And if that's the case, you're going to have net worth. Look at the business side. It's the same concept. If your assets, your business assets exceed your liabilities, then you've got equity. You've got owner's equity in your company. Companies that have equity are usually able to be scaled. They're usually able to be sold. Conversely, if you don't have equity in your company, it's very difficult to sell a business that doesn't have equity. So the concepts, again, are not much different on your personal finances versus your business finances. But again, from the start, many of us, business owners, a lot of, greater than 50% that don't survive past 5 years, we kind of jump into it without really thinking through this process, like the financial aspects of it. So let me go a little bit deeper. I believe there are 6 key areas of financial management every business owner needs to be aware of. Everybody's going to deal with this at some point in your business, right? And as I said, it's not enough time to really run through these in detail. So I'm going to try to just touch on them briefly and more so like plant the seed. And my recommendation would be, if these are areas that, are a pain point in your business, that you reach out, schedule your consultation, and we can walk you through this. 6 areas are cash flow, billing, payroll, taxes, financial reporting, and your budgeting. Every business owner is going, whether you realize it or not, you are going to deal with these 6 areas. The one that I believe trips people up the most is taxes, right? So let me explain that. If you look at these other areas, right, you got your cash flow, that has a lot to do with your banking, right? So for example, if you're running a business money's coming in and money's going out of something, right? Whether it's your pocket, whether it's an envelope, whether it's your personal bank account, which I highly advise against using your personal bank account to run, to run your cash, to manage your cash flow. But every business owner sort of does that inherently. You've got billing, right? If you have great product, services, things of that nature, oftentimes you're going to have to send out an invoice to get paid, right? So you could be providing the best product and service in the world. If clients aren't paying your invoices, then you're not getting, back to the cash flow, right? That's the cash flow issue. So you got your billing, and then conversely, you have to pay your own bills as a business, right? You have to pay your vendors, your team, and the services that you utilize. You got your payroll. Eventually, this is our Millionaires Focus Group. If you're running a multi-million-dollar business, at some point, you're probably going to need employees, right? Or you're going to need a team, and you have to pay those folks, right? So you're going to need a payroll process, a payroll system in place to maintain that, or you got to pay yourself somehow. Remember, we talked about the stat where 50% of businesses don't survive past 5 years, according to SBA.gov. So a lot of startup business owners, you can't even take a salary for the first couple of years, right? You can't even pay yourself. So like, what does that look like? How do you plan for that? How do you project that, right? It's estimated or it's suggested. And your personal finances, again, where we make the correlation on personal finances versus business. And your personal finances, it's suggested that you have 6 months of savings in an emergency fund. That's just a general recommendation for everyone. So if you're running a business, a startup business, where you may not be able to take a salary for a couple of years, is it in your best interest to have 6 months of savings, or perhaps more? You might need a year of savings, right? And again, don't get hung up on the actual months or the actual dollar amount, but the key is to plan for it, as Lee pointed out. What's your plan? Like, what do you have set aside so that you can either pay yourself, so that you can fund your business? Like, that has to be accounted for, right? You got I'm gonna come back to the taxes in a second. You got your financial reporting. You would be amazed at how many clients and just how many people I sit down with, and I ask the question, so is your business profitable? And a lot of times from startup businesses, I'll get an answer like, I don't know, I think so, but maybe not. Okay, so what did your profit look like? What was your estimated profit for this year or last year? I don't know, it might have been 1,000, maybe it was 10,000. Like, you can't run your business that way, because then you're running your business in the dark. Because step one, you got to know if you're profitable or not, right? Step two, you need to know what that profit amount is. So that comes down to your reporting. You have to have a financial reporting system. And then finally, this sixth area of budgeting, that more so deals with scaling your business, right? The reporting side is just helping you run your business by the numbers. You need to know things like, what's your margin? What's your top line revenue? What's your bottom line net income? What's your gross margin? You need to know those things just for reporting's sake. But for purposes of creating a budget and a projection, where do I want to be in 3 years? Where do I want to be in 5 years, in 10 years? You have to be able to scale your business. And you can't do that if you don't have a budget for your business. So again, those concepts are not much different in the personal finances versus the business finances, but all of these areas are going to affect you as an entrepreneur, as a business owner. And again, the one that I think trips people up the most is the tax side of it, which is what I'm going to focus on for the rest of this presentation. But again, I want to get you guys' input and your feedback on this. So I know I threw a lot at you. So what questions, what comments do you have so far just seeing this? Like, what is one of these areas that trips you up as a business owner? If you don't mind being transparent and just kind of speaking to that.
Taxes, baby. Goodness gracious. And not even in the sense of like, all right, what we paying for it. It's just every year I'm like, dang, I wish I knew this last year. You know what I mean? Like every year I get hit with some knowledge, and I'm like, yo, all right, we gotta run back and implement. Like, I just started a 401k, and you can contribute to that. I'm like, yo, why ain't nobody tell me this last year? So so taxes, it's such a beast. When you really start to think about it, bro, like taxes is like, it's a beast. And I still think I don't truly understand how big of a monster that we all gotta fight.
For sure. Appreciate you sharing. Anybody else? What's your feedback on that? What's that area for you that sort of trips you up?
I would probably say taxes as well, but I don't know that it trips me up yet because I haven't filed. Like, this will be my first year, 2020. But just not knowing all the in and outs. Like, all I know is I'm taking 20% off whatever I bring in, and I'm putting that aside for taxes in the future. I've done that consistently, so I'm good there. But I checked recently, I actually have too much money going to taxes based on my QuickBooks. So it's like, okay, like what I'm missing, should I not be putting that much? I was in Oregon before, now I'm in Texas. I'm sure that contributes because Oregon state tax is like ridiculously high. But yeah, like taxes.
Yeah, for sure. So you guys are kind of proving my theory for me, which is what I said. I think taxes is that one area that trips people up the most, but all of these areas are important, as you can see, in running a business. So any other questions before I jump in a little bit? And we're gonna get to it. Trust me, with the taxes, we're gonna get to it so I can help all of us kind of better understand that area.
Yeah, I would say definitely taxes for me. I've been doing some research on it and just trying to figure out what's best for my business right now. I'm a LLC, but I've heard other podcasts and different people like a Lynn Richardson talk about starting a home-based business and do a sole proprietorship because you get more benefits that way. So I've been kind of confused as to like, should I just do a home-based business and get better advantages on my taxes, or is it better to do an LLC because you're more profitable in the end? So I definitely been kind of confused on that part.
Gotcha. Yeah. Appreciate you sharing that. Like I said, we're going to get to it. I'm going to do my best in this short amount of time to at least plant the seed to help you start to think through these areas of taxes. And if it's, you might, that thought process might mean arriving at the point where, you know what, I don't truly understand this on my own. So I need to bring some help in. I need to bring somebody in to guide me. That might be the answer, but I'm going to at least start the process of thinking through that. So let's get a little bit deeper. Here's the thing with taxes, right? I'm going to say this off the bat. In order to fully understand taxes and sort of how that works, you have to understand business structure, right? Because so much of our tax code is centered around how your business is structured. And I'll be more specific about what I mean by that. But it's estimated to be about 26,000 pages of tax code. So there's no one person or no one source that's going to be, the full-fledged expert when it comes to taxes. But the key is to, align yourself with someone that's at least knowledgeable in that area, connected in that area where they're constantly growing and learning, right? I've mentioned this on our calls before, just for me to maintain my CPA license, I have to do about 80 hours of continuing education every 2 years, I believe it is, right? So I'm constantly in seminars, I'm constantly on development calls where I'm learning about these areas, right? And sometimes I get overwhelmed, I get confused, like, whoa, wait a minute. That's not what I learned, right? That's not what I knew. That's not what I understood previously. So I'm just saying that to say that, this is not an area that can necessarily, it may not be an area that you can just conquer on your own. But if you're going to understand it, you absolutely have to understand business structure. So let me explain what I mean by that. All of you, believe it or not, on this call have made a decision as to your business structure. If you operate a business currently, you have made a decision on your business structure. You may not realize that, but you've done that. And there's two things that happen when you establish a business structure. Number one, it's a legal process, and number two is a tax process. So legally, you're establishing a recognized entity, right? I'm not an attorney, so I can't give you legal advice, and I'm not going to go super deep on the legal area. Hence, you might want to speak to an attorney if you need more guidance in that area. But on the tax side, I can certainly, run through that area with you and help you guys understand that. But always realize when you're talking about business structure, I heard someone mention, the concept of LLC versus sole proprietor. Like, you got to realize there's two things taking place. There's a legal process and there's a tax process. On the tax side, you're making a decision about how you're going to pay taxes to the IRS. And here's the thing, these two sides, this legal side versus the tax side, the IRS is not necessarily overly concerned with what's taking place on the legal side and vice versa, right? So these two sides may look very, very different. These two decision processes may look very, very different, right? And they're not always aligned with one another. So you have to keep that in mind. Anytime you're going to talk about business structure, anytime you're going to talk about taxes, there's always a legal decision being made as well in regards to your business structure. Let me go a little bit deeper in that. So first, let me tell you how most businesses are structured in this country. Believe it or not, 72, this is according to the IRS, right? This is the data that they publish based on the tax returns they receive every year. 72% of businesses are taxed, right? We're talking about the tax side, are set up as a sole proprietorship. And that might sound a little confusing because I got a note on here that says including LLCs. Like, well, wait a minute. How are you a LLC and a sole proprietor? Let me take a step back. There's two decisions being made. There's a legal decision and there's a tax decision. And those two things don't always align with one another. So if you own an LLC and you are the single owner or the single member of an LLC, by default, you're going to be taxed as a sole proprietorship. A lot of people don't realize that. You don't have to be taxed that way, but that's the default. So unless you designate otherwise, meaning that unless you want to be taxed as a corporation, particularly a C Corp, S Corp, again, it's not enough time to go super deep in those areas, but key point is that 72% of businesses in this country are taxed as sole proprietorships, meaning that the IRS says, okay, that's great. You got your LLC, that's all good. But I'm gonna need you to go ahead and pay this tax money based on your personal rate of income tax. That's what a sole proprietorship is taxed at their personal rate of income tax. Here's the bigger issue. I'm gonna ask you guys a question. If you just look at this graphic and think about, if the IRS is doing an audit, which area do you think gets audited the most out of these business structures that we're looking at? Corporations, S Corp, C Corp, partnerships. Which area do you think gets audited the most by the IRS? Anybody?
Sole proprietorships.
Exactly. It's just the law. It's just by virtue of the numbers, right? 72% of businesses are set up as a sole proprietorship. So it doesn't even mean you're doing anything wrong or worthy of an audit. You could be, but you may not be. But just the virtue of being set up and on the tax side, not speaking so much on the legal side, speaking specifically to the tax side, just by virtue of being set up this way, you're incurring or you're subjecting yourself to more audit risk just by being taxed that way as a sole proprietorship. Conversely, C corporations tend to be have the lowest audit rate just because 5% of companies of business returns are filed as a corporation. So they tend to have the lowest audit risk just because they're not audited as frequently. Again, this has nothing to do with whether you're even doing something that's worthy of an audit. It's just the numbers of it. It's just what the IRS sees every year. And they publish this data every year to say how many returns are filed by entity type. And of course, this drives to a large degree, this drives the number of audits that take place among the IRS. So let me pause there because I know I'm throwing a lot at you guys. What questions do you have so far on what I'm showing you?
What's the difference between an S Corp and a C Corp?
Good question. So there are a couple of key differences, but I'm going to tell you one of the basic differences is that generally S Corps are limited in terms of the number of shareholders. Corporations are owned by shareholders, right? So that means, so if you think about the New York Stock Exchange, for example, or the NASDAQ, pretty much all of the companies on those exchanges are C Corps, meaning that they have unlimited shareholders. You can purchase Apple, you can purchase equity in Google, Nike, you literally purchase equity in that company on a stock exchange. S corporations are generally limited to no more than 100 shareholders. That's sort of like the basic differences. There are a ton of other like little subtle differences that I don't have a lot of time to go into. So if you happen to need like significantly more detail on that, my recommendation would be let's schedule a consultation, and I'll walk you through some of the more nuanced areas. But that's one of the basic differences. Is it's limited in the number of shareholders. It's also limited in the type of stock that can be issued. So generally, C corporations can issue to their shareholders. They can issue what's known as preferred stock or common stock. In most cases, S corporations cannot do so. Like they can have one class of stock only. So again, it's a very layered question and answer, but that's sort of like some of the basic differences between S Corp and C Corp.
Got you. Thank you. I appreciate that.
Ryan, I got a question.
Yes, sir.
All right. So let's say everybody's business goals are usually different. So let's say like you're in business because your intention is that you want to sell your business at some point. Which structure is more advantageous for you to have for your business to sell? And let's say, for example, if you're an LLC, do we have any options to convert your business structure to another business structure that might have more advantages over the other?
Yeah, for sure. Absolutely. So the second part of your question, for sure, you absolutely have the option to convert among any business structure. And keep in mind, I'm speaking to the tax side, right? So on the legal side, it is possible to be set up as an LLC and be taxed as a corporation, right? And that might sound confusing, but it's possible. By default, you're going to be taxed as a sole proprietorship. So absolutely, on the legal side, you can convert your business structure at any time you so choose, and that would involve, getting an attorney and kind of walking through the legal side of that, because you're establishing a legal entity, right? In theory, what an LLC is supposed to say is, you, the individual, Keegan, I think that was Keegan that asked the question. You're separate from you, the business, right? That's what it's supposed to do, is create a layer of separation on the legal side. And that comes into play if you have, like creditors, people that are trying to sue you, things like that. That's where it comes into play. However, you can not only change that business structure anytime you so choose. Even if you don't change your business structure, you can designate to be taxed in a different way, right? So that, I think that was the second part of your question. The first part of your question, in terms of what's the best business structure, it really depends. And that was actually the next question I was going to jump into and ask you guys, which business structure is best, right? Out of the ones that we looked at S Corp, C Corp, partnerships. Partnership, by the way, is just a collection of sole proprietors generally. So if you have more than one sole proprietor, you're generally a partnership on the tax side. And that can include LLC. So if you have multiple members of an LLC, meaning multiple owners, by default, you're going to be taxed as a partnership unless you choose otherwise. But in terms of which business structure is best, it all depends. It starts with your vision, right? What's your vision of ownership? And I give a couple examples here. Do you intend to be employee owned versus manager owned versus investor owned, right? We talked about the book, The E-Myth, a little earlier. That kind of digs a little bit deeper into some of these concepts. But if let's use me for an example. Let's say you got an accountant, or you could be a chef or a photographer. If I'm employee owned, that means that I, the employee, am also the owner, meaning that I'm performing the service or the product in addition to I'm the owner of the company, and that's generally the case for sole proprietors, right? You wear all the hats, right? You cook the food, you do the marketing, you do the billing, you do all of those things, right? So essentially, you become self-employed. You created a job for yourself. That's not necessarily a bad thing, depending on if that's your goal, if that's your vision, is to be employee owned, then it probably makes more sense to be set up as a sole proprietor in some form or fashion. If your vision is to be more manager owned, meaning that you manage the people that are providing the services, the products, et cetera, and you happen to also be the owner or one of the owners in the company, then you're more of a manager owned business. That might make more sense for a partnership, could make sense for an LLC, potentially a corporation. Third example I give is if you're investor owned. This is, again, we were talking about companies like Nike, Google, Apple. They're set up as investor-owned corporations, meaning that if one owner or shareholder of the company sells their shares or passes away or anything of that nature, the company continues to exist, right? And it continues to operate in the same fashion, regardless of what happens with the shareholders, because it's investor-owned. So the investors are not the one, in the store selling you an iPhone from Apple, right? If you own Apple, you the investor are not the same one creating the iPhone, right? You're just purchasing equity in the company. So it really depends on your vision. How do you see your company on day one versus year 3 versus 10 years from now? Do you want it to be more of a legacy business that passes on to your, the next generation? Or do you want the business to cease to exist when you cease to exist, right? And that's all going to go back to your vision. So there's no right or wrong answer to that question, but there is an answer for each individual based on what your vision is. Does that make sense, or anybody else got a question on that or anything else that we talked about?
That makes sense.
Cool.
Yeah, I was gonna ask, how do you what's the process like if you go from one tax shelter to another tax shelter within the same legal structure?
Mm-hmm. Yeah, so there's a process that takes place with the IRS. It would involve, my suggestion would be that it involves your accountant walking you through those areas, walking through the numbers first and foremost, being able to project out what that's going to look like in terms of your tax liability. And then there's going to need to be a filing process that takes place with the IRS so that you are taxed accordingly. And it's usually not a one-stop shop type of thing. It's usually sort of ongoing in terms of maintaining the requirements if you do choose to change that tax structure without changing your legal structure. So yeah, I would definitely suggest if you don't have an accountant, you would need to involve an accountant to get that squared away, especially on the tax on the IRS side. Good question, by the way. Anybody else before we dig a little deeper? All right, cool. So I'm gonna try to give you a couple of examples of each business structure of the main categories. There are a lot of business structures that exist, but I'm gonna kind of give you some pros and cons of each sort of like, you know, the four sort of basic categories, which are sole proprietorship, partnership, corporation, LLC. So I'll give you some pros and cons there, and then I'm gonna, you know, sort of wrap up, turn it over to you guys, and you know, if you have any questions on this, and we can, you know, do like a little Q&A. So sole proprietorships and partnerships, again, I have in parentheses here LLC, because keep in mind, you know, there's a tax process taking place in addition to a legal process. So on the legal side, you've set up your LLC, you got your EIN number, you got everything you need on for your legal side, right? On the tax side, by default, if you're one owner, one member, you're going to end up being taxed as a sole proprietor. If you're more than one member or one owner of your LLC, you're going to be taxed as a partnership. So that's why I have the LLCs included on this slide. Some of the pros of establishing an LLC or a sole proprietorship, it's a low setup cost generally. It doesn't cost very much to register the business. Very little compliance, that like ongoing requirements that need to take place. There are some that you want to make sure you stay on top of, but in general, the costs are minimal, the compliance is minimal, and you're going to get some of those standard sort of write-offs, deductions, tax loopholes, like, you know, your meals, your travel expenses, your office depreciation. So you're going to get all of those things, right, from running a sole proprietorship as your business structure. In addition, there is somewhat of a flexible tax structure, which is what I alluded to when I say you can decide, even if you are an LLC and you happen to be just one owner or two or three, you can decide that I don't want to be taxed as a sole proprietorship. I want to be taxed as a corporation, either a C Corp or an S Corp. I'll explain a little bit more about that in a few minutes. But there is some flexibility in your tax structure, even if you are set up as a sole proprietorship or partnership. Some of the cons are, it's a disregarded entity. This is what I talked about a little bit earlier when I gave you this graphic. Because the IRS does not recognize an LLC as an established business structure, they consider it what's known as a disregarded entity, which is why you end up getting taxed as a sole proprietorship as by default if you're the single owner of an LLC. If you have multiple owners of an LLC, by default, you end up getting taxed as a partnership, because the IRS does not recognize an LLC as a tax structure, as a business structure. Doesn't mean that legally you haven't set your business up properly. It just means that, again, on the tax side, IRS is like, cool, great, you got an LLC, that's all good, but I'm gonna need you to go ahead and pay, you know, the most. We're gonna try to get the most that we can get out of you in terms of taxes, unless you know differently. So that's what I mean by disregarded entity, and that could end up getting, you know, subjecting you to more audit risk, just because 72% of businesses are set up as a sole proprietor. So it sort of tends to be like a red flag area for the IRS, and they, you know, they're on the lookout. A lot of people do unscrupulous things when they set up a business structure that way, and the IRS knows that. So they're, you know, sort of red things that unknowingly to you could be taking place are red flags to the IRS, just by virtue of being set up as a sole proprietorship or partnership. Another disadvantage is the tax rates. So the simplest way to explain that, there are 7 different tax rates for individuals that scale up as high as 35%. I believe it's either 35, it might be 37%, I'm sorry. And generally, the higher your income goes, the higher that rate scales up to a maximum of 37%. Keep in mind, this is the Millionaires Focus Group, right? So let's take that for a second. Let's assume that you've got $1 million in profit, and on the individual side as a sole proprietor, you're being taxed at the highest rate, which is 37%. You know, you're paying $370,000 on that $1 million profit, right? Here's the trick that a lot of people don't realize. I shouldn't say trick. Here's the detail that a lot of people don't realize. Corporations have a flat tax rate, especially particularly C corporations. They're never taxed any higher than 21%. They have a flat 21% tax rate. Individuals, right? Sole proprietors, partnerships, or just individuals who work for a living, who don't own a business, can pay as high as 37% in taxes, because it scales up. Corporations don't have that problem, right? They pay a flat tax rate, assuming they have profits. If they don't have you don't pay taxes if you don't have profits. You don't pay income taxes, I should say, if you don't have profits. Also, one of the disadvantages for sole proprietorships and partnerships, you're generally going to pay you're going to pay more types of taxes. So for example, you're going to pay self-employment tax in addition to income tax. And you could end up paying payroll tax if you got employees. So there are a lot of different types of taxes that you might end up paying just by virtue of being set up as a sole proprietorship or partnership. And also there's very little continuity for sole proprietorships and partnerships. So when you want to transfer ownership, meaning if you want to sell, often you have to do a complete sell of your business because you can't sell a share of your sole proprietorship on the New York Stock. It's not that easy to just go purchase a share of Blueprint Financial Group, right? It's not traded on an exchange that way. So generally, if I want to transfer that ownership, in many cases, there might have to be a complete sell of the business. If you got partners, that can be extremely tricky because let's say that one partner passes away or something happens and their share passes to their family member. Now you're in business with their family member, right? Because and their family member may not want to sell the business. So that can get really, really tricky on the legal side, which is why I always suggest speaking with an attorney when you're talking about your business structure. And again, the key point that I guess I'm trying to illustrate here, there's no like cookie cutter answer as to what's best, right? These are just some of the pros and cons. It might make sense for you based on your business vision and your goals, but I see a lot of, I'm sometimes just on social media and I see a lot of memes. It's like, yeah, set up your LLC, put it in your kid's name, pass it on to your family members. And yeah, that's cool. That might be a good idea. But on the tax side, you start talking about multi-million-dollar businesses, might not make the most sense to be set up as in terms of your tax structure. Might not make the most sense to be set up as an LLC. It might make sense or it might not, but that's where you kind of need that guidance from an accountant or someone who's knowledgeable in that area. My recommendation would be a CPA. But there are, people out there that do good work and they happen to not be CPAs, but that's just my general recommendation because just by nature of the work that I do, I've been, I've had to cut my teeth in learning all of these different areas and actually running multi-million-dollar businesses and not just filing their taxes. So let me pause here and see what questions do you guys have just based off of the sole proprietorship, partnership sort of angle.
Isn't there a tax deduction for your employees as well? Can you mitigate your taxes kind of like, I guess, pushing it towards your employees? I'm trying to figure out how Jeff Bezos didn't pay, any income or any taxes or anything.
Got you. Yeah. So Jeff Bezos, keep in mind, he owns Amazon, which I believe is the largest company in the world, if I'm not mistaken. So he's got a team of accountants, attorneys, and everyone that is, combing through that tax code to make sure that they are not paying taxes. So that has a lot to do with it. Is that he has his advisors, his board of advisors that kind of guide him in that area. But yes, you can absolutely have employee costs in running a partnership. Here's the tricky part about a sole proprietorship, right? Sole proprietor means technically you're self-employed, so you are the employee. So you can't necessarily deduct that salary because you got to recognize that salary as your income, right? Which means that you're going to pay taxes on it anyway. And you're going to pay self-employment tax in addition to your income tax. So yes, as a partnership, you can have employees and deduct that, that salary cost potentially. As a sole proprietor, it's tricky because you got to pay that self-employment tax and you got to pay the income tax. Like either way, you're going to take the income, right? If you pay yourself as an employee of your company, then you still got to put that income on your tax return on your 1040. So you're still going to recognize the income and you're still going to end up paying taxes on it. So it doesn't quite work out best as a sole proprietorship if you are looking to sort of minimize your taxes by having employees. Is not going to work out as a sole proprietor because you are the employee. You follow me?
I've been seeing memes too about if you have a business, put your kid on the payroll, pay them a certain amount a year, you could write off that amount that you're paying them. I was like, that's actually a pretty decent idea.
Yeah, I mean, there's all types of strategies and things in the IRS tax code where you can do that. My thoughts on that would just be very, very, just tread lightly. When you do stuff like that, tread lightly, because the IRS is hip to it, and just make sure you've got all of the proper guidance that you need, everything in place financially in terms of your financial structure, your business structure. Have everything documented, have everything in place, and have someone guiding you when it comes to using those types of loopholes and deductions.
Mm-hmm.
Hey, Brian, this is Charles. How's it
Yep.
going?
I'm good. How you feeling, man?
Good. I was just going to throw in there, a lot of times small businesses like to use the 1099s and the contracts just to, mitigate that whole employee type payroll. But at the same time, like you just said, it's imperative that you keep impeccable, documents and records so that when you do send them to your CPA, they can best guide you on how to move forward.
For sure. Yeah, thanks for mentioning that. I appreciate it. Yeah, so absolutely utilizing 1099s, which are independent contractors. For those who are not familiar with that terminology, it just means that you do not pay taxes, employment taxes on 1099 contractors. They are responsible for their own taxes if you're an independent contractor. So you need to, again, make sure that you're knowledgeable on that area, or you're working with a CPA who can, because there's also requirements in addition to documentation of what needs to be filed when you use independent contractors. So make sure you're working with your accountant, to help guide you in that area of what needs to take place if you choose to use independent contractors. And there are also, the IRS has a set of guidelines and rules whereby they require you to, when it comes, so in general, when it comes to the IRS, it's not what you know, it's what you can prove. So there are there's sort of like some standard tests that the IRS has in terms of if you can prove that someone is an independent contractor, and the IRS may disagree with how you're using that contractor, that 1099 person, they can disagree with that based on how you've documented, how you've proven that usage of the independent contractor. And if they do not agree with that usage or that documentation, you can end up paying employment tax for that individual. So again, it's just a tricky area that you got to make sure you have good guidance on, make sure you're educated. But again, this all goes back to what's the question we started out with. Why do most businesses fail? Why are we set up for failure? Is because we're often either we don't have the guidance through these areas, or we're not educated on it. We're not really thinking through it. And so again, that's not to shame anybody. It's just to say, like, look, just, don't ever be afraid to just raise your hand and say, I don't know enough about that. You know what I mean? I need to invest in either the education of it or the coaching of it, or some type of advisor that can guide me on it. So great questions, great comments. I'm gonna move on a little bit more just for the sake of time. So let's look at corporations. And again, as you have questions, definitely stop me, jump in, and after this, I'm gonna kind of pause for a little bit and do a little bit of Q&A after I do like one or two more slides. So corporations, when I say corporations, I'm really talking about two types, S corps versus C corps. And again, these are just like the basic categories of business structure that I'm running through. So the pros and cons for corporations, and I'm kind of dealing with these together. First off, keep in mind that you can be an LLC and be taxed as a corporation, C corp or an S corp. You do have the option to do so if you're working with a knowledgeable accountant who can guide you in that area. So one of the first advantages is you have the liability protection regardless, right? So let's say that you're set up, your business structure on the legal side is set up as a corporation. By default, you're already set up that way on the tax structure, right? If you were set up legally as a corporation. So you've got the liability protection because a corporation legally is considered a separate entity from its owners, right? So if I'm Brian Murray and I own shares of Google, I, the individual, am considered a separate entity from Google, the business entity. So there's liability protection there for the corporation inherently built in. There's also continuity, meaning that you can transfer that ownership much easier than you can with a sole proprietorship or a partnership. And you've got some advantages when it comes to taxation. I mentioned earlier about the brackets, right? The tax bracket. There's a flat tax rate for C corps, which is 21%. And that's not the case for sole proprietorships and partnerships. So you have some advantages being set up as a corporation, both C corp and S corp, right? What are some of the disadvantages? And I try to sort of keep it basic here. I didn't go into the weeds here. I'm just trying to give you some basics on this because it's a very extensive area that requires more time than we have. But generally, there's a double taxation when it comes to C corps. This is why a lot of people historically have avoided C corporations and sort of like there's always sort of been like this mindset that C corporations are bad because they have double taxation. You pay taxes on the dividends and you also pay taxes on profits. And not great to have to do that, but keep in mind, as a corporation, as a C corp, just keep in mind that your tax rate can be substantially lower at 21% than an individual who could be making that same amount of money that you're making, these $1 million that we're talking about, right? So there's a double taxation issue when it comes to C corps. Also, personal service corporations this is a tricky area. Personal service corporations oftentimes cannot be set up as a C corp. So if you think about, give you an example of a personal service corporation, sometimes for like doctors, attorneys, even accountants to some extent, those can be considered personal service corporations. And it's tricky to navigate being a personal service corporation and a C corporation. A lot of times that's sort of like this, that's disallowed. You can run into, as an S corp, you can run into what's known as unreasonable compensation issues, meaning that if I'm the CEO of an S corp, and let's say I'm in the, the health field or healthcare field or something like that, and I try to declare myself with a salary of $1 per year, I'm going to run into what's known as unreasonable compensation issues. The IRS, that's like a red flag. They're not going to like that. So that's a tricky area for S corps, is to make sure that you're not subject to unreasonable owner compensation. There's also, I touched on this a little bit earlier, but you're limited, generally for an S corp, you're limited to 100 shareholders. Whereas for C corps, that's not the case. Like C corps are, again, Apple, Google, Nike, companies that are traded on the New York Stock Exchange or NASDAQ. Generally, they don't have that criteria. They're not limited to 100 shareholders, which is why you can go on and easily purchase equity and ownership in those companies. And for C corps, you're limited. Again, I touched on this a little bit earlier, preferred versus common stock. C corps are very limited in terms of the classes of stock that they can issue. So those are some pros and cons. Again, I try to keep it very basic because these are very intricate areas. Any questions, any comments, feedback on just what we're talking about with S corps, C corps?
Your last point. You said limited classes of stock. I thought it was S corp, right? S
Correct.
corp,
Yeah,
C corp.
that's for S corps. Correct. Yeah.
Okay. Just making sure.
Yep. Any other questions, comments on the corporation aspect, pros and cons?
Brian, I don't mean to get into the election, but I know you're watching closely with what's going on with the election and everything else, because they're saying two different things.
Mm-hmm.
And can you elaborate on that? How, one person saying you make more money, you're going to tax this way. You make less, you're going to be taxed this way. Mm-hmm. So looking at that, if I'm up under one of these corporations that I have that saving, and all of a sudden my saving disappears, what is that you're saying for going into the future for the guys that are thinking, hey, I'm actually probably one of those guys who's teetering on that, on that line. Like, do I change it? Do I leave it the same? What would you say about that?
Yep. Yeah, my answer to that would be, kind of going back to one of the first points we mentioned in the seminar. You got to always be running your business by the numbers, right? So you have to always be in tune with the profits of your business, how you plan to project that out, how you plan to scale your business, what does performance look like next year, 3 years from, there's a lot that goes into that answer, so to speak. But it all comes down to the numbers of your business, right? In general, the tax code does not necessarily fluctuate easily based on political climate. So if you guys remember a couple of years back, I think it was 2018, we had this major overhaul of the tax code, right? I think it was it's called the Tax Jobs and Cuts Act, right? Which brought a whole new tax code. That was the first time we had an overhaul in the IRS tax code in like 30 years, in like decades, right? So it established new tax rates, a bunch of different loopholes and deductions in areas that, are very, very intricate. And that was a major overhaul of our tax code, and that doesn't take place easily. So I'm putting that in context to say that just because someone gets elected in office doesn't mean that they're going to easily overhaul a tax code, because that has to go through a lot of layers before that becomes law. It has to go through House, Senate, et cetera, et cetera. Like there's a lot of layers to that becoming a new tax code, and that doesn't take place easily, regardless of political climate, regardless of candidate. Now, there are some changes in the tax code that takes place every year, right? Some nuances, some small areas, but in general, those tax brackets that like they fluctuate. When I mentioned that there's a flat 21% tax rate for corporations, that generally does not change, right? So that was considered a permanent change at the time that it was put in place with the tax code, meaning that in order for that to change, you have to completely overhaul the tax code again, which is not an easy thing to do for any candidate. Some of the smaller changes that take place is, just that scale of when you make more, you pay more. Those tax rates can fluctuate because there's 7 different tax brackets that scale from 10% all the way up to 37%. So they do fluctuate, and candidates, they're based on political changes, there could be some changes on that. But in general, the tax code itself is set up. The IRS was very, very strategic in how that was set up and how it was, and they're still figuring it out. So I wouldn't expect a major overhaul of our tax code anytime soon. It's very difficult to do. There may be some small changes from year to year and based on candidate and things of that nature. But in general, man, my answer is just run your business by the numbers. Make sure your accountant understands these areas and is in tune with those changes so that you can game plan accordingly, regardless of who's in office.
Thank you for that, because I think that's what's scaring a lot of people. And they get into politics and it starts to scare a lot of people about what they're making, if they're selling a business, what they could be taxed on, and should I sell it this year or should I sell it next year, or should I, those are all factors. So I appreciate you making that clear.
Yeah, for sure. And here's another point to just keep in mind when it comes to the IRS. The IRS favors ownership, right? So all of these loopholes and these deductions and these things that are built into the tax code that most of us aren't educated on and we don't know about, it generally favors ownership, right? So people who own financial assets, people who own property, people who own businesses, there's always going to be favorability in the tax code somewhere. It's set up in that way to benefit those individuals and those entities, which is why, Adonis, I think you mentioned Amazon earlier. That's why Amazon has this team of accountants on the case to make sure that they're combing through, because no matter what, there's going to be something built into the tax code that favors entrepreneurship ownership. Like that generally has not changed over the years. Whereas individuals, again, you could be paying as high as 37% of your tax bracket on your income tax. It's just not set up to benefit individuals that, kind of work a standard 9 to 5. End of the year, they're looking for that huge refund, which just means they've overpaid throughout the year, their taxes, and they're looking to get that money back, that interest-free loan that they gave out to the government. Like, it's not set up to benefit those individuals. It's set up to benefit people who have skin in the game, so to speak, people who have ownership of businesses, property, investments, et cetera. Any other questions on the corporations, the business structure, anything of that nature?
Yeah, I have a question.
Yeah.
So my business is more like service in the music industry. Do a lot of work from home, and every other business I'm going to start will probably be something where I'm just more so home, working online and things like that. So, like I said before, I was learning about information on the home-based business side. I don't know how familiar you are with it, but do you know of any disadvantages of starting, I guess, home-based business and doing it, I guess, taxes that way? Are there any disadvantages that I'm missing that I might not see going that way?
Yeah, I mean, we may have to schedule a consultation to go deep in that area, but I would say in general, again, I think it goes back to business structure. So it's going to depend on how you're set up, sole proprietor versus partnership, LLC, et cetera. That generally has a lot more to do with your tax liability, and how you end up being taxes than just whether you run your business from your home. So that, yes, to answer your question, there are some unique advantages and disadvantages of having a home-based business. And I would say, let's talk through that individually so I can make sure I'm speaking to your specific circumstances. But in general, having a home-based business, if you think about the things that you pay by virtue of just owning a home, right? Your utilities, you might pay for your Wi-Fi service, paying for repairs on your home. Generally, you can deduct a portion of those costs by virtue of having a home-based business, right? You can't do the full 100% unless, you know, it's tricky to try to do that. I wouldn't suggest trying to do the full 100% usage of your home, but based on what that area of your home is that you dedicate solely to your home-based business, meaning that if you have, let's say you have a designated office space and that's where you're handling the administrative duties of your business, or you might be meeting with clients in that designated office space of your home, that's the portion, what that represents in terms of like square footage, that's the portion of what you can deduct on your overall costs of maintaining your home, right? Where you can run into some tricky areas are, you know, using your, let's say that designated office space that you're using for your home-based business, you know, if you're also using that for, your entertainment purposes, you know, if you got children, your kids might be using that as a play area, like you can run into some issues there with the IRS because it's supposed to be solely dedicated to the operation of your business. So yes, there are, that's some of the generalities of having a home-based business. But it's really going to depend on your specific circumstances. So my recommendation would be like schedule some time and talk through your specific circumstances.
All right. Thank you. We'll do that.
Yep. Cool. Any other questions? Any other questions, comments on the business structure? Cool. All right. So let me jump through one more slide and then I'm gonna kind of wrap it up, turn it over, for any final thoughts, questions, etc. So here in general, oh, my bad, skip part. In general, there are some best practices that I believe every entrepreneur, every business owner needs to know about, regardless of your individual selection of business structure. There are just some best practices that you need to apply, regardless of whether you're LLC, corporation, S Corp, C Corp, et cetera. So the first best practice is register your business, regardless of the business structure. Register your business in the appropriate state that you're doing business in. That means that you're going to need what's called a registered agent. My recommendation would be to have an official business address if you don't have like somewhere other than your home. Like if you don't have an actual office dedicated space or address, you can use what's called like a virtual address. Also, if you're doing business under a name that differs from your registered business, then you're going to want to do what's called a DBA name. So for example, my company's called Blueprint Financial Group. If I'm operating as Murray Inc. or Murray Incorporated, then I would need to register a DBA name. And that's if I'm going to be holding myself out as a business and not operating under that name or using something other than that registered name, you want to do a DBA name. Make sure you get an EIN number with the IRS, which is known like a tax ID number. Not only is that necessary for filing your taxes, but it's also going to be necessary as you establish banking relationships, which I'll talk about in a second. Definitely going to need your EIN number. You're going to need that for a variety of reasons. So definitely make sure you set up an EIN number and purchase a web domain. I know that not necessarily it's optional, but in this day and age, like almost all business is done online. Everybody pulls up your website. Everybody wants to know what your web presence is, your social media presence. So those are some best practices regardless of what your business structure is. Second area, your business banking and your accounting. One of my strongest recommendations would be to establish a banking relationship, a personal relationship with your banker. And if you're not sure how to do that as a small business, let me know and I can, kind of walk you through that. Again, you're going to need your EIN number, your business name in order to help. And I'll give you an example as to why that's important in a second. Make sure you purchase an accounting system. One of the go-to systems out there is QuickBooks. There are other systems out there aside from QuickBooks. I've found that QuickBooks tends to be one of the more user-friendly systems. So you don't have to be an accountant or a CPA to use QuickBooks. It's set up to be intuitive and to kind of be easily understandable by folks who may not be accountants, CPAs, et cetera. So definitely make sure you set up an accounting system like QuickBooks and work. If you don't fully understand how to manage your QuickBooks, make sure you're working with an accountant, CPA, somebody of that nature who can help you with that. And make sure you're doing tax projections, not just your tax filing. But one of the advantages of having a CPA or someone of that nature is to be able to project out. Lee, you asked the question, what does that look like next year? What does that look like? Those are things that in running your business by the numbers, you're going to need to do some projecting to know, are you even eligible for some of these tax shelters that exist, some of these loopholes? Like if you don't have your numbers and you're not running your business by the numbers, and it's very difficult to answer those questions. So those are some, some best practices when it comes to banking, accounting. Wanted to give you guys a personal example and just be transparent of how this benefited me when the pandemic first hit. So last year around the end of 2019, I decided to, take on a banking relationship, and I have a couple of business bank accounts set up at different institutions. I chose to go with a credit union. I generally like dealing with credit unions because they tend to be smaller. They tend to be owned by the members of the credit union as opposed to like shareholders and investors. And that can be beneficial in a couple of different ways, but you're not limited by any means in where you can establish a banking relationship. So one of the relationships that I established that I'm really grateful for was at a local credit union. And met with the banker and kind of talked through my business model and everything like that right before pandemic, like probably let's say 3 months before pandemic. Pandemic hit, and I'm like, oh man, I got clients that are walking away left and right. They're looking like they're going to have to close up shop. And, it's a very turbulent time. And then the government comes out with this, the PPP funding, the CARES Act, right? And I'm like, man, I know some of the requirements of it just because I have to do that ongoing education, that continuing development. So I know about these programs, but I also know there's a side to it that favors established entities, right? So I had to get on the phone with my banker and say, look, man, this is the situation. This is what I'm going through. I need to navigate this, this PPP system. I already know the requirements and what I need to do, but I just need to make sure that my application gets to the top of the pile, right? Like I don't want my application to be sitting underneath Amazon or Google or Nike because I'm never going to get seen. So I had to, get on the horn with my banker, and he talked me through it, made sure that it wasn't just a check the box type of thing. Like it was somebody I had a relationship with. So we talked regularly through that process, right? So I made sure that my application was at the top, made sure I had all my requirements in line, which I generally have anyway, just from running a business. But I was able to be eligible for all of those programs that came out, all of that money that got swooped up by, to be quite honest with you, a lot of institutions that really didn't need the money, or they could have gone on and been just fine without getting some of that funding. Was able to help my wife, who's also an entrepreneur, get set up for some of those programs, and some of my clients, to make sure that when this CARES Act came down and these PPP loans and funding and EI, was it the EIDL, I think it is, I made sure that I was first in line because I had a banking relationship with someone that can help me navigate that area. And I wasn't just blindly, just clicking an application online and wondering what happened. So wanted to make sure I shared that because that's helped me continue to fund my business, make investments in the right area so that I can continue to go on in spite of pandemic and things that, that took place. So definitely, my personal motto, I try to do 100% of my business based on relationship. I really, really try my best not to be a transactional type of person, like a transactional accountant, who's just sort of doing the tax return, just sort of checking the box, filing the paperwork. I don't believe that you really benefit from that, especially business owners. Like you need more than just someone to file your taxes is the reality of it. Because again, what we know is 50% of businesses don't survive past 5 years. So that we don't want to be set up for failure. We want to be set up for success. So try to give you guys all that I can get. Oh, one more area, sorry, I want to cover. And this is in relation to what I call a business advisory board. And this is more of an informal thing. So I would say each of you as business owners, if you're the CEO of your own business, you need to have your board of directors, meaning that you need to have a qualified business attorney on your team, someone who can help you when it comes to things like securing a facility if you need one for your business. Depending on the business that you run, you might need a particular type of facility, location set up. If you're going to be doing hiring, if you're going to have legal agreements and contracts, those are all things that just come along with running a business. So I think it's an investment and it's a cost associated, no doubt, but it's in your best interest to have a qualified attorney on your team that you can speak with in these areas. Of course, a qualified CPA, or what's known as an EA, which is an enrolled agent. The difference there is that as a CPA, I've built my career off of actually running businesses as opposed to just filing taxes. Not to say that a person who has an EA or an enrolled agent designation, it doesn't mean they can't help you in some of those same areas. But my recommendation would be, if you're going to run a business, then you kind of want to work with an accountant who's ran businesses, or who's familiar with that and not just sort of filing the tax paperwork. So, you're going to have needs like not just filing your taxes, but your staffing. If you're going to use 1099s versus W-2 employees, you might have some advisory needs because, again, on day one, there is no CFO in most cases when you're starting up your business. So you are the CFO in addition to the CEO, in addition to the CIO, like you're wearing all the hats. So you're going to have some advisory needs that come along where it might just be in your best interest to work with that CPA on your team. I think it's in your best interest to have a qualified credit expert who can help you build business credit. That was extremely helpful for me as I was going through getting funding for my business, just to stay afloat. Like when pandemic hit, I had to just kind of figure it out. Like, how do I continue to operate? And being able to establish some business credit was extremely helpful. That's what multi-million-dollar businesses do. Like, they use other people's money. I know that sometimes debt can be this bad word and we all get freaked out by it. And I'm appreciative of being able to navigate that area of credit and debt and be very diligent about it and not overextending yourself or over leveraging yourself when it comes to debt. But the reality is that businesses use debt. They use leverage. If you look at the balance sheet of any of the companies that you purchase on the New York Stock Exchange, Nike, Google, et cetera, Apple, they have a balance sheet that's going to show you how much debt they have. So it's not a bad thing per se. It's not inherently bad. It's all based on how you manage it, right? There's a science to managing the financial aspect of your business. And finally, make sure you're working with a qualified insurance agent. I, as a CPA, as an accountant, am probably going to have different insurance needs from, say, someone who's a photographer or a graphic designer. There's a certain type of coverage that I'm going to need to have that you may not need to have, but I have a qualified agent that I speak with who can help me sort of navigate and guide me in those areas. So again, I'm not trying to do it all on my own. I have my team of advisors, my board of directors that I rely on in order to run my business. So that's it, man. That's what I wanted to share with you guys as far as the financial management, the business structure. I did say earlier that I was going to touch on this, and then I'll turn it over for just any final thoughts and questions. I'm going to offer a free consultation, one for anybody that's in the Millionaires Focus Group, which is our ongoing group that Lee has established. But also, if you happen to just be a participant on this call, I'm going to also offer that to you as well, a free consultation. Generally charge somewhere in the neighborhood of $125 to $175 for a consultation. So I'll do that for free. The only requirement I have for that is that you either tag me in a post on your social media. Here's my social media handle, which is Blueprint. Oops, go back one time. Blueprint_CPA. So you can either tag me in a post if you want to, share, something that you learned from the seminar. And you can do that on Twitter, LinkedIn, Instagram, or if you want to send out like a personalized email, I have my email address here. I'm also going to drop this link in the chat box so that you guys can have my the link to my email address and all of my information on my virtual business card, which I got done from the Millionaire Focus Group. And yeah, that's it. That's the only requirement I have. Just share with somebody, pass it on, pay it forward, and I'll make sure you get set up for that free consultation. Any final comments, thoughts, questions, etc.? Feel free at this time.
Well, I want to thank you for all the information. Number one, I mean, it was great. This was awesome. I mean, you did an awesome job, and I know all the guys would agree with that. And this shows us how important having these things in order is. And just by you covering some things, I was taking notes, and I was like, let me get my free consultation in, because it's important. And I want people that's on here to understand that being a part of this group is not just knowing the marketing and all of that, but it's making sure everything is in order. Because when they're in order, I mean, you win. You feel more comfortable. You're not feeling like you're out there and you're not guessing. So, and if anybody has joined, Brian can, and I know Brian, this is a couple guys that you know and people that you know, he'll talk to you about what the Millionaire Focus Group is all about, what we're all about. And the main thing, this was great. I mean, I enjoyed it very much, listening and taking notes, and also understanding, getting into this new entity that we're taking a look at. it's going to be important because in 2021 it's supposed to happen, but I'll be contacting you on it. But guys, take advantage of this moment. And I want you all that's a part of the Millionaire Focus Group to understand that I don't want to see you get into anything and have all this learning and all this knowledge, and then we're not using it, and then there's hiccups in your business. I mean, the greatest thing is being set up before you start, or even if you're in it, you're setting yourself up to win. And that's the best thing. I played professional football. So one of the things is that we didn't step on the field just to go out without practicing first. So we had to practice and we had to study our playbook, but the coaches had to put the whole thing together. So Brian is like the coach who's put all the information about, what we should have about LLCs and C Corps and everything else. And, some of the stuff because I'm getting a business from someone who has a C Corp. And I'm like, well, what does that mean to me? And how does that affect me? So definitely those are aspects that you guys need to take a look at and really seriously think about having your business in order, because we're on here to win. We're not here to fail. And, we know that the failing rate, like you said, within 5 years. But if you have things in order, your chances of winning is much more greater. If you understand how the marketing, if you understand how to put all this together. And a lot of us on this Millionaire Focus Group have talents in different areas. I mean, so many of us have talents in different areas, and I want us to be able to use one another to make sure that, it's not someone out there that's taking advantage of you, because your business can be successful. So thank you for that. And I appreciate you taking time out and just letting us take advantage of your knowledge and everything else that you've went to school for, and in those many classes and many passing exams. It's not easy. So we don't have to do that. And that's the greatest thing. I don't got to go to school for it. So I will be taking advantage of it. So do you have a link to where we can set a time? It's on your digital card. Is that where?
Correct.
I set a time?
Okay. Yeah, I just put in a link for the digital card, so you guys can, you can click on my digital card to set up a time, or just email me. Just email me, and I'll make sure you get set up for the time you need.
Does anyone have any questions on here before we go into something where we're going to go over? Does anyone have any questions for Brian? Anything? It's
Yeah, I just wanted to say thank you, Brian, because I think more than anything, what you've empowered me to do was ask the right questions during this session. And so, of course, that makes it a consultation no-brainer, and I'm going to try to get it in before anybody else on the call. But no, I just wanted to thank you for that, because you've empowered me with the questions I need to ask for the answers that I need to be prepared for come next tax season, which I want to start I know I'm late in the game, but I want to start preparing for immediately.
No doubt. Absolutely. I appreciate that feedback, bro. Appreciate it.
Hey, Brian.
Right.
Hey, Brian, this is Chuck, man. I just want to, again, shout you out, but also, let the people know that, this is part of success. Mm-hmm. Success is absolutely partnering with people who are excellent at what they do. That's going to grow your business, and having a CPA available is essential to growing your business, because it guides you in the right direction to make great financial decisions that'll put you in the right place, that you can maximize the knowledge and understanding that you get, because it says, in all you get an understanding, but most importantly, you need wisdom to apply it. And what you gave us today was a lot of wisdom, so that we can really apply those tools and those resources to our businesses to see them succeed. I'm a business person with a PhD in leadership, and understand it, but accounting's not my mastery. That's not what I master. So coming to someone and surrounding, having a team that, when everyone are gifted in their area of gifting, allows you to be successful. Because trust me, as a business owner, I don't reach success by myself. Mm-hmm. It doesn't happen. It will never happen, because I need a team of people who are great and are passionate about what they do, and then guide them to a common vision and a common purpose.
Appreciate that, Chuck. You know, I'm always listening very intently, man. When you speak, like every week, I'm writing down those, you know, those gems and those jewels that you drop every week, man. So I always appreciate you, and definitely, man. Thanks for the feedback. Thanks for the comment. Appreciate it.
Anyone else?
Nah, just a
That
simple
was in.
a simple thank you. I feel like every interaction, every interaction I have with Brian has always been impactful. Has always left me thinking even more of being better as a man, and also as a inspired entrepreneur and a businessman. So I just want to say thank you again, Brian, for everything that you do and everything you provide.
No doubt. Appreciate you, bro. Appreciate that.
Anyone else? All right. Well, Brian, you got any last words?
No, man, just, you know, just, of course, always got to shout you out, Lee. I think what you're doing is incredible, man. This focus group has caused me to think so much differently about my business, and we're actually working on my business and not just working in it. So I just want to shout you out. And also, man, I can't leave this seminar without saying that, man, everything I do is God-given, or I make that my intention to do. Everything that I'm doing, man, is by design, is God-given. I could be in a totally different area doing something else, quite honestly, probably making a lot more, you know what I mean? But to me, it's not just about the making of the money. It's about the purpose of it. And when I hear you guys give me the response that you do, it lets me know that I'm walking in my purpose. So appreciate you, Lee, and I appreciate everybody on the call.
Oh, Brian, that was beautiful. I was just thinking that, you know, when it comes to business, it's not about, you know, obviously leadership's not about people, it's about purpose. And as you master your craft, I guarantee you there are people who want to see your gift and want to partake of that fruit.
Mm-hmm.
And that's what they do. You can't make it personal. You know, as you become who God has purposed you to be, he's going to allow the manifestation of that fruit to just harvest, and people will pick from it. You know, what people do when they pick the fruit, they pick it and they go away. But that's okay, because you are serving your gift to everybody. And I guarantee you, if you master it, people will seek you out. People will seek you out because, again, you have something that they want.
Appreciate that, Chuck. 100%, man. I'm always listening. When you drop those jewels, I'm always listening to it. Write it down.
Well, I appreciate you guys being on the Zoom today. It was very impactful, and I know that we all took something away from this, and it all makes us step back to look at our businesses and look at what we're in and making sure. So I know Chuck is on here, but we're going to be having him come on too, and he's going to be talking about more or less about the business structure and about understanding the business structure and why it's important and what you could be missing and all these things we're putting together. And the reason why we're putting them together, because in 2021, we want you to be set up to win. And if you don't know these things, and sometimes we may think we know a lot, but it's just having those people who have been there and understand it. And like Chuck said, it's your expertise. You know, I can tell you right now, to sit on a phone call and to get this information from people, it could cost you $500 just to do it for a Zoom. I went to one of the #1 entrepreneur schools in the world at Babson College, and they're basically having Zooms right now with this same type of information that you're receiving, and they're charging $3,000 for people to be on, and they're only doing it from 9 to 12, and that's it. So what you're getting, this is invaluable. This value that you're getting is incredible. So I want you to know, to take advantage of it, and to make sure that when you take advantage of this, that this is being done the right way. And I want to see, we will be going through business audits, meaning that we will send out, you know, what are the things that you have, and do you have those things checked off? And if you don't, you might want to get them checked off before the end of this year, because going into next year, you want to start winning and not have to think about, oh, I need to call an accountant. Oh, no, I'm missing this piece. So that's going to be very important to do. So, and I know Chuck is going to be coming up with his PowerPoints and sessions and talking on the business structure side of things. And we're going to, I got to get with Chuck to find out if we're going to do that in the next week, or we're going to skip a week with that. And then, because we'll send out the emails to the Millionaire Focus Group. And then if any of you new guys that are on the call that haven't been here, or we put it out, if you want to be a part of it, just let Brian know, and Brian will make sure that you guys have that contact, and then we'll be able to send you out information. But it is important. We're all here to win, and just knowing that. So being that and knowing that we're focused on that, I want to make sure that who's been working on their marketing piece, taking a look at that, And as you talked about, Brian, it's a journey. You were really talking about the journey, and that's what we said. And I want you all to think from your standpoint when you said, I heard Mark say about, items not being sold or things not being sold out. I want you to think about from this standpoint always. It's not from our journey, but it's from the buyer's journey. What is their journey? How are they going through it? How do they see that your business is credible? How do they understand that it's more, that it's worth what they're spending their money on? What is the perceived value of what you're putting out? So a lot of us develop a business off of what? Off of the way we feel. Oh, I think this will work. Oh, this is gonna work. Oh, let me put this out there. But it's really based off of your buyer. So when you look from your buyer standpoint, we go into their journey, and I know Mark has a lot of experience with Nike, and he's been there for 10 years. He was there for 10 years, and now this guy is flying through with his business. But I understand he knows his business structure has to be in, because he's going to be one of those guys that's joining that millionaire group, and doing that, all of his things are going to have to be in order. And just like with me, I mean, personally, with what's going on over here in businesses, and my wife in business and everything else, everything has to be in order, because one hiccup can cost you. And I just appreciate you, Brian, for going into the details and really spending some time with us, understanding the structure and taxes. I mean, some of the stuff I was like, I never knew that. And I was like, I didn't know that. Because we move so fast, and we try to concentrate on what we need to concentrate on. And I just appreciate everyone on the Zoom today taking time out, and and I hope that all of you have spent time with someone this week, or called someone this week, and not spent all the time on business. We know on this focus group, it's important that you reward yourself. It's also important that you guys be able to sometimes step away from business, and don't make your life full of business, because sometimes that can drown you out too. So it's just putting those pieces together and knowing that this is really developing itself. I mean, it's something that God gave me and said, do it. And I was obedient in doing it, and it's been developing itself. And I'm proud of the way that it's going. And, knowing that I have guys on here that are hungry, that are really looking to do the things they're doing for their purpose. And that's the biggest key. When you're on here, pay attention to your purpose, because like Chuck has said, and Brian have said, and Marv has said, and everyone on here have said, is that, I feel like I'm not really worried about the money. I'm just doing God's purpose. And that's important, because I can tell you, Adonis, when you do those drinks, I deal and dab in the health market, right? Because I'm studying to be a health practitioner. So the main thing is that actually enhances the body, and what you put in your body, you got to take care of your temple, because you can't work if the temple's bad, right? You can't be a witness if the temple's bad. So what you're doing, you're bringing your purpose out in producing these fruits and doing that, in the drinks and the shakes and whatever you do, you know, let God use you in that and download into you all those things, because you're really helping life of people. And that's the way, you know, because you have a purpose. You know, when Brian does people's taxes and they find out they saving money, I'm just going to drop a little bit that's dropping to me. When you do taxes and find out that your taxes, people are happy. So when that joy comes, you can serve when you have joy. You can do more for people when you're joyous. So you bring that joy. And when Marvin, when you deal in that, as far as developing websites and making sure that people's websites are functioning with the SEOs and everything else, what you're doing is that you're actually bringing joy to people. You're opening up their things to businesses and putting their thoughts and their purposes for whatever God has. And then when you deal with Kevin, of course, Kevin has his music and doing things. And Kevin, you got to understand that when you do your music and when you put it out, that joy that people have and that thing that people bring in to you is broadening their perspective of thinking and things that they can't have. So you're really opening up a door that never has been opened. Then when you deal with Charles has many businesses, but doing the cakes, and let me tell you something, when you talk about a man that has been successful and understands it, is looking to help others and looking to build others, all he's doing is continually building what he has, but in that blessing. And then when you go over to Keegan, you go with Keegan, and all of a sudden, Keegan, you understand in your business, you got wellness, you got development, you have what does a man want? And you got all these things that are opening up these doors for men and changing the way that they think. And then when you get over to Mark, of course, Mark, you're dealing with the clothes. And then when you're dealing with those clothes, when I put on something, you know, it changes the way I feel. It's making sure that I feel good about myself. And what you're producing is actually, and you always push God in your material and knowing that God is the center of your material. So we all have a purpose, and I can just see these purposes being developed over time and how they're happening. And it's just amazing to see it. And I don't know what all you guys do, that some of the guys that's on that's new, but I'm sure we will find out. But just let us know, and we appreciate everything. And I know that this is God's purpose for whatever he's purposed you for. And I know that if you keep focused, that you will be successful in all that you do. So at this time, I'm gonna ask if anyone has any questions, if anyone has anything they want to add or anything.
This is Chuck. We're gonna have mine in about 2 weeks. I want to catch everybody after Black Friday, make sure everyone's effective and efficient managers of their resources. Hopefully you aren't spending too much on that weekend. But yeah, we wanna go ahead and go about 2 weeks. That way I can touch on, and one of the things I want to touch on is about you know, you as a leader, you as a manager of your resources, and how that will propel your business to be not just, you know, local success, but how it impacts you as an entity. And so we're gonna get deep into that whole aspect of management and leadership, and how that really will translate your business into, you know, something that will grow to another level.
Well, I appreciate that. Yes. And I'm looking forward to it. And we're going to make sure that we put it out to people when these happen. These are open forums. But when the Millionaire Focus Groups comes in, that's a closed forum. And if you guys, people that's on would like to be a part of that, please contact Brian, and Brian will make sure that he has your information, and we'll make sure that we can make sure that happens for you. But it's, you know, I'm looking forward to that also when that comes up, because I know it's going to be dynamic. Is there anyone else that would like to add something? All right. Well, this concludes our Millionaire Focus Group with dealing with knowing about accounting and not why you need an accountant, and going over taxes and forming your businesses. Hey, reach out to Brian, and let's make sure that we make it happen. Now, we always like to close in a prayer. And I know that this week has been a struggle week for a lot of people, just looking at the news and everything else. But, you know, let's keep our minds clear on what our focus is and going to the next step. And things that we can control, let's control it. And things that we can't control, let God control it. And that's where he wants to step in. So I'm looking for a person just to close us out in prayer. And Chuck, do you think you can do that for us?
Yeah, I can do that. Dear Heavenly Father, we thank you for waking us up this morning, clothed in our right minds, Lord. We thank you for allowing us to understand who we are as leaders and who we're purposed to be. Most importantly, Lord, we thank you for allowing us to be effective and efficient managers of the tools and resources which you blessed us with, Lord. For we want to be able to take care of the little so that we can be prepared for the many, Lord. Lord, we thank you for gifting us with friends, Lord, for gifting us with masterminds who will sow into us, Lord, things that will allow us to grow as individuals. Most importantly, Lord, we thank you for allowing us to be good fathers and daughters and wives and uncles to our families, Lord. For we understand that is purpose and that is first, Lord. The family structure is key to success, Lord. And we thank you for giving us that wisdom and understanding, Lord, that we may be able to make great decisions that will lead us to the guidance of who you purpose us to be in life. We thank you for Lee. We thank you for all the brothers and sisters that are on this call. Most importantly, Lord, we thank you for your son, Jesus Christ, we pray. Amen.
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 You guys enjoy your weekend. Have an excellent time and spend some time with family. Call someone.
Sir.
Have a blessed day, fellas.
Thanks, Lee.
Have a good one.
Amen. Thanks, Lee. Thanks, Brian. Great job today.
Good job.
Have a great day, fellas.